Why this September will be an ugly confirmation of a real 50% bear market like in 2008. It's pretty rare for stocks reversing gains of more than 1% and ended up down 1% into the close ahead of holiday long weekend. Check out these charts. The market on Friday morning went up 1.2% till noon, and then after lunch, Wall Street started to sell down more than 2%. I was pretty surprised that such a green day even became a red day. That's not a good sign for a bull in this market that hoping to reach an all-time high by the end of this year. In this video, I will show you why this September will be a confirmation of a real bear market, not just a technical 20% down bear market, but a real one like 50% down in 2008 or 2000. I have real data proof that recession is confirmed right now as we speak. You don't want to miss this one. And of course, smash the like button. Welcome back everyone to my Audacious Witch channel where we talk about macroeconomy, stocks, bonds, and commodity markets. If you like any of these markets, please consider subscribing to my channel. And of course, smash the like button if you've enjoyed today's video. Market prepare for an ugly September. August was a terrible month for markets. All eyes on upcoming inflation data, Fed policy meeting. Investors should brace for retest of June 16 low. Coming off of their worst August since 2015, stocks on Wall Street have gotten off to a volatile start to September as investors worry about the Federal Reserve's aggressive rate hike plans to combat soaring inflation. Year to date, the S&P 500 is down 16.5%, the Dow dropped 12.7%, and the Nasdaq slumped 24.8%. Judging by recent history, investors should brace for further turmoil as September is historically the worst month of the year for markets since 1897, the first full year of the Dow Jones Industrial Average's existence. The blue chip index has suffered on an average loss of 1.13% in September compared to an average gain of 0.77% for the other months of the year. The same is true for the S&P 500. Its average September return dating back to 1928 is negative 1.03%. Over the last decade, the tech-heavy Nasdaq 100 has declined by an average of 0.6% in September, the only month of the year with a negative return. September has historically provided even more of the seasonal headwind during a midterm election year. The Dow has dropped in 11 out of the last 18 pre-midterm Septembers going back to 1950, according to data from the Stock Traders Almanac. When the S&P 500 has been down year to date heading into September, as it is this year, the index has averaged a loss of 3.4% during the month, whereas when the S&P was up year to date going into September, it has been flat for the month, according to Bespoke Investment Group, citing S&P 500 market performance dating back to 1928, it added. For the remainder of the year, the index has averaged a loss of 1.2% when coming into September, with year-to-date losses and gain of 3.3% when coming into September up year-to-date. Moves in the options market also seem to indicate more pain ahead. The number of outstanding bearish options contracts on the QQQ ETF, which tracks the Nasdaq 100, is currently near its highest level since the 2000 dot-com crash. Until we get further clarity on the Fed's rate hike trajectory, as well as its plans to shrink its massive $9 trillion balance sheet, I have a hard time seeing how the risk assets can make a sustainable rally. There are a plethora of market-moving events coming up this month, particularly the August Consumer Price Index report and of course the Fed's key policy meeting. Analysts expect CPI could be hotter than July's 8.5 year-over-year pace. Fed Chair Jerome Powell signaled in his Jackson Hole speech in late August that there will be no pivot to a looser policy stance until inflation is tamed. The probability of a 75 basis point hike has jumped in the past week from 64% to 75%, and a half point increase is now seen as less likely. The Fed has already raised its benchmark interest rate by 225 basis points this year. I expect Powell to reiterate his Jackson Hole pain message, so investors should be prepared for the S&P 500 retesting its June 16 low, a decline of approximately 8% from current levels. As an old Wall Street market adage says, don't fight the Fed. Not all bear markets are created the same time. If you call any time, we drop 20% in SP 500, a bear market, and 20% rule. Statistically, there are less than 50% chance we can get a real 50% drop, a confirmed bear market. In my opinion, what happened in March of 2020, that's not a bear market at all, even though it has the quickest drop of 35% in the market of our lifetime. It doesn't even have a bear market rally and a kiss of death signal. What's a kiss of death signal, you may ask? Well, just follow these 3 steps. Check out this chart. Go to a monthly chart of a stock or index. It needs to make a recent all-time high, and it needs to drop below 21 EMA, exponential moving average. Then it needs to retrace back to 21 EMA, that's the kiss. And finally, it needs to drop below the previous low, and that's the death. As you can see from 2000 chart, we first drop below a 21 EMA and go back up to kiss it, and then we made a lower low and we confirmed a real bear market. The same goes for 2008. At September, we made a new low. After a kiss of death signal, it confirms a real bear market of a 50% drop. This time in 2022, we just came out of an all-time high. Check. We dropped below a 21 EMA, made a first low, check. Then we retraced back across 21 EMA, but didn't get to hold above it for long. Now we are heading back down. If in September we go back to a lower low, that's the kiss of death confirmation. Then we have our real bear market confirmation. Remember, a month ago, people still think that this was not a bear market rally. They thought, oh, look at the strong market, breath. We are going back at an all-time high like in 2020. They didn't realize right now in Europe, people are paying $1,000 per barrel of oil in utilities prices, and they're in a recession. And in China, situation is much worse. Bank runs, people defaulting on their mortgages, drought, and they are still in a lockdown. US is not an island. Economy is connected. I have one more recession confirmation signal to show you. It's the US Treasury yield curve spreads. Check out these 2 charts. We have data showing there are more than 50% of the yield curves inverted right now on the bond market. The spread between 10-year and the 2-year could be thought of as early warning indicator. Economic disorder, monetary danger ahead. The spread between 10-year and the 3 months can be considered brace for impact, imminent collision. When you have more than 50% of the spread all inverted, that's a confirmation signal that recession is a certainty at this point. How deep of a recession? That's the question we should ask now. Next Fed rate hike is going to be September 21st. So far, there are 75% chance of a 75% basis point hike and 25% chance of a 50 basis point hike. The Fed is likely going to keep raising rates until something breaks, or as they plan, it keeps the rates high till inflation cools, but it might cool the economy down to a depression. If you are worried about the economy heading into a depression, why not write a book today with me, become an author, and start a brand new life with an abundance mindset as an entrepreneur. You can create your own future and decide how much money you want to make, and no more worries about your boss's painful comments or ridiculous orders. What do you say to your boss right now? A big shout out for Taddy, Baddy, Canada's #1 female rapper. I recently had the pleasure to meet her. This is her new CD. She is on Spotify, Instagram, Facebook, and YouTube. So go check out her music. She is so very incredible. She also bought my client Teddy Eazzy's Wicked Pussy Perfume book. So I will show you that one right now. So I will show you Wicked Pussy Perfume by Taddy, Eazzy. So she purchased a copy, Taddy So Baddy purchased a copy of this one. So I'm going to actually read. Love fades, lust multiplies exponentially. Love is overrated and lust is underexplored. Love is a lie made up to sell engagement rings and home mortgages, and lust is the truth. I am your goddess, I feed your lust. You must pursue lust at all costs. Wicked Pussy Perfume by Taddy, Eazzy. The 3 most important influencers you need to meet. I did write the foreword in this book, and this one is by Vicente, and she is my client, yes. And Taddy Eazzy is my client too. So once you realize that your powers come from your daily awareness of everything around you, you then start to see magic everywhere with abundance and opportunities. So that is a quote that I gave Lee for inside my book here. So it's so incredible. I'm going to read another one here of hers. When you build your life from your wisdom, understanding, and your ability to help others to succeed each day, you will be much happier, more energized, and you will make a huge difference in the lives of the peoples around you. And Ignite the Passion, Co-Create Your Dreams by David Vine and Jama. That is amazing. Attitude changes everything for us. So, and my book, Thank You, Thank You, Thank You. Gratitude is so amazing. You can take it with you wherever you go and wherever you go. All of the magic happens for you. Whether it's work days, holidays, or vacations, it's been designed to fit your everyday life. So gratitude changes your whole life, whether you're on vacation or whether you're working, investing. Crazy Little Thing Called Life. And this is another one of my books. It's a bestseller too. And Time, Awareness, and Secret Millionaire, another one of my books. So I hope you've enjoyed my video today. I appreciate you coming and hanging out with me today. Thank you for watching Audacious Money Witch channel. Thank you for being a fan. And remember, whether you're investing or trading, always practice patience with an abundance mindset. There's always an opportunity ahead for you. Never FOMO. So please like my video today and subscribe to my channel. It would mean so much. I hope you had a great day, and thank you for watching. Bye everyone.